With house prices at record highs and the cost of living biting hard, financial counsellors have been run off their feet with calls from people struggling to pay their mortgage.
Financial counsellors are seeing increased demand. We're seeing people calling with increasing levels of stress, people feeling completely overwhelmed.
The head of Financial Counselling Australia, Dominic Mayrick, says the rising mortgage stress is a sign of the times.
The housing market at the moment is brutal, and people will prioritise their housing over everything else. So if they can't pay for housing, it's very likely they can't pay for anything else either.
Financial regulator ASIC has now released a scathing report accusing Australian banks of failing a growing number of customers seeking financial hardship assistance.
They're in crisis. They've lost their job. They've lost a loved one. They're very ill. They could be the victim of family violence. These are people that need special attention.
The report found there'd been a 54% increase in hardship notices from the last quarter of 2022 to the last 3 months of 2023, when the number of borrowers seeking assistance jumped to almost 53,000. The most common reason people struggled to pay their mortgage was borrowing too much, followed by reduced income and health issues. The biggest number of hardship notices was in New South Wales, but relative to population, more Victorians were struggling to pay their mortgage. But despite growing levels of mortgage stress, ASIC found that access to financial hardship assistance could be hard to come by, and more than a third of customers found it so onerous they gave up. The report examined 10 financial institutions, including major banks and lenders, and found that while the majority of customers who sought financial hardship support did receive it, 40% of them went back into arrears after the assistance period ended.
It shouldn't be so hard, as we found, for people who are going through hardship, for their applications to be considered by banks and lenders. So at the heart of this, Nadia, is really focusing on the needs of the customer rather than the financial risk or issues of the bank.
In an interview with The Business, ASIC Chair Joe Longo said while lenders were making improvements, they had to lift their game.
They've made a bit of progress, but there's a long way to go.
We know that there are holes and obstacles in the hardship processes that exist. We appreciate that the lenders are listening. The ASIC report is clear about what needs to be done, and now we expect to see urgent action.
That could include legal action by the regulator.
ASIC will take whatever action we think is necessary to ensure compliance with the National Credit Code. That includes taking banks or lenders to court.
A warning of more scrutiny to follow.